As we start every Tuesday session, we do it with what the hell's going on the last week or so. Even if you watch this on recording, if it's not relevant, it helps drill down in on paying attention to what's driving us, if anything. Sometimes it's, if you look at my screen, it's nothing. There's nothing moving us. Generally, the market's very slow, unopportunistic. There are things driving us. U.S.-China trade is baked in. That's going to drive us down if they don't have a deal. And it's closer and closer to having something hit the tape to drive us lower. And I want you guys to be aware of that. The longer it takes to have a deal dated and a meeting on the calendar, the more chance we're going to get this big negative headline that's going to drive this market down. The index is down, and you want to be able to take advantage of that if you're in front of your screens. That's the most likely outcome right now. Or I should say the most likely surprise if there's going to be a surprise. You never could predict when a surprise is going to happen. That's kind of why it's a surprise, or the definition of a surprise. So just don't get into I told you so. I didn't expect that to happen. You do because you come to these meetings. U.S.-China trade deal is priced in. Without one, we go down, and we go down in a hurry. That could happen the longer we get without something on the calendar. We're almost through April. The better chance there is that there's a breakdown in these negotiations. It's priced in that they got a deal. Hell, they might even announce something tomorrow and justify some of this upside that we've had. Now, another thing that came across the calendar on Sunday that became a driver for Asian markets and a little for us, Sunday into Monday, China was not going to do as much stimulus as the market wanted. So their markets went down, and we went down a little bit. That was kind of reiterated Monday into Tuesday, their session and our overnight. They went down, but we didn't go down. We not only rallied into yesterday's close, but we rallied a little bit in the overnight session. So when you get all these headwinds, which was some of that news that came out overnight, which broke us Sunday night, but we couldn't break on Monday night, Monday, early Tuesday morning, it's like negative news, you can't go down, so look out above. And that was kind of the stance coming into this morning. But just know that the driver was kind of dismissed, negative driver on the U.S. market side, and we rallied quite a bit. Still rallying. And what I told people from early on, don't be surprised we start trading 30. Now, when I left the trading room, 35, 40. I mean, it's that grind, upsides the right side. You guys get short, and I told people I'll never talk someone out of a short or a long, but if you get short, you better not be an adder because you're going to turn the day into a disaster if indeed it's this upside grind like it has been. Generally, on days like today, the best chance you have of a pullback and a move lower is in the last hour, the last half hour. All right? Now, that kind of gets you up to speed as what's going on. The Mueller report late last week, I'm not going to beat that dead horse, but that's what it will become, a dead horse. The Democrats will try to beat it as long as they can. If they come out, I think this is an outlier, but if they come together and the Democrats actually move forward for an impeachment and they're really going to bring it up and everything else, yeah, we'll go down if it's a black and white comment. I think a real big surprise, though, because I don't think they want to do it. They just want to keep this patient alive, patient of, a bad president colluding and all this other stuff he does. They want to keep a heartbeat there. The longer they try to do that, it could backfire for them, but I could care less what either side does. All I care about is what we do and how we react to things. So I think that becomes only an issue if they move towards impeachment, all right? So that brings us to, and I got news for you. These last 5 minutes make it well worth coming to meetings like this. Even if you knew what I was going to say, even if you knew everything I said, to hear it again is just really, really important. What's driving us and what isn't. Now, the Russell has been a great driver for a long time, but over the last couple of days, be around guys that watch other markets because they're going to keep you in tune and you will them to markets that are working for you. Like a couple guys in the room yesterday got my eyes more focused on the Russell, and it helped. The Russell was weak yesterday, strong today. Helps become a driver, all right? Now, just to set these meetings up for next month, May 7th, Steenbarger's coming in. If you want to ask him live questions, be there live. That's the May 7th meeting. May 14th, Brett Nord from my old prop firm will be with us. If you want to ask him questions live, be there live. I will send out a recording of a couple events that Brett did for the CME group, for the radio and their television. I think more, they had him on camera a couple times. So you get a little backdrop on him, and I think it'll make May 14th even better. Really bright guy, right there up in lockstep with Brad. In fact, these guys trade and talk to each other every day. So similar guys in as far as trading skill, but also aptitude and work ethic, articulating, and quality person. You don't get that. You generally don't get great trader, great person. It's an outlier. Sometimes, and that's not the trader's fault. There's a lot of great traders I can introduce you to. You'd think they were ditch diggers, the way they explain what they do, really. So it's hard because not all people who do something good could explain it well. And then there are some people who explain it well and they never traded successfully a day or month in their life. So that's that just sets you up for May as we wind down April. I wanted to take today to talk about two things. I want you guys to think about and put, I will not name names, but I need you to put a number one pain point that comes to your mind right away. Your pain point. What's your common pain point that happens to you that you struggle with, or it's a pain point? Think about it as I talk a little bit down memory lane, and then we'll talk about these. But if there's not any content in the chat box, remember, I'm the only one that sees the chat, so you're going to remain nameless. Nobody else will see your remarks. Pop them in as I'm talking. But if there's not any content in there, then we'll cut the meeting shorter because nothing to talk about. Everybody's got a pain point. Put yours in there. If you got multiple ones, I don't care. What's your number one pain point? Pop them in as I'm talking. And be specific without being too long-winded. Don't be too general. Kim, I think that's a good one, but try to be more specific. And then I'll go back and talk about them. I'm going to talk about this because I'll tie it all together into the pain point in a second. I got to tell you guys, did I spell proprietary wrong? I think I did. I think it's EI. I before E. What is proprietary trading firm? I'm going to tell you this because 19 years ago tomorrow, I had my first day. April 24th, 2000. It was my very first day as an electronic trader. Traded in the pit for like 8 months prior to that, 6 months prior to that. Clerk before that. But my first time clicking a mouse was April 24th, 2000. If you don't know what a prop firm is, you got to know. And it's how I started trading. And it put me, and this picture, believe it or not, is 8 years old. And I wore makeup. I didn't wear makeup. The lady put makeup on me for the interview. It was a live interview. And I look better than that now. Just joking. I'm a board of trade member at this point, and I'm trading on the floor. Ready to quit? You guys have heard this story, but I'm going to tell it to you again. Ready to quit? Because I can't make any money as this pit trader. This is what pit traders look like. We didn't have the tie. This was our badge. Board of trade member, pit trader, ready to quit. My wife, but then my girlfriend made me stick to it. She said, I'll support you. She was working. I was only 25, didn't really need to make money. Didn't have any kids. She says, I'll, support you. I was living at home. So she gave me the opportunity to find what a prop firm was. Didn't know what it was. She didn't know what it was, obviously. But it bought me time, which brought me the introduction to this prop firm, which is just an office of guys who trade with a computer screen. And there's different deals. A percentage split's worked out. First 3 years, the trader gets 50% and the house gets 50%. Now, I go in for the interview. How many times you heard me tell this story? I'll tell it again. I go in, just not for the interview, find out what it is. Come back a week later for the interview. In between there, I said, Dad, should I go? Take the job. He says, go back before 10:30 and look at the cars in the parking lot. Nice cars, take the job. The owner was also a former pit trader. And he says, what makes you think you're going to make money here? And I said, because if I put myself around other people doing it, I'm giving myself the best chance. And he says, you got the job. If I put myself around other people that are doing it, you got the job. But he also said this that I don't often talk about. He says, it's not just about putting yourself around people that are making money. It's about putting yourself around people who are also trying to make money. It's not just those making money, because if that's all you're around, you'll be jealous and maybe envious. But if there's people below you, people with you, people together, then there's that push and pull. Serious people trying to do it is also what's important, along with people who are doing it. Really difficult, in fact, impossible for any one of you to find a physical prop firm. And even if you did, it's not practical to go get hired by one. It's just not. You're going to be in New York, Chicago, London. And even if you are, it's probably not beneficial to go get hired by one anyways. But if you were hired by one, how could you set up that structure as close as possible? And I think a lot of what you would learn is covered in the Edge training, as you guys know. I think that we fill a void in the team room with keeping guys together, talking, relating. That's all that room is for. It's not necessarily how great the content might be back and forth, which is really good. It's just the opportunity to meet and relate to people who are on the same page as you as far as the business that they're in. Some making it, some around zero, some are still struggling. Same thing in this prop firm. There were guys that were hired and fired, guys who were hired and quit. Most guys in the prop firm stuck and made money. When I started, and I'm going down this memory lane because tomorrow's that 19th year anniversary, I'm going to tie it into Pain Point. But when I started, there was no class that you had to go to at the end of each session. We had a once a week meeting that the equity guys, there was only 4 or 5 of us, met with this guy. There were 2 Pauls, a good Paul and a terrible trader Paul. The good trader Paul would host this meeting. He would print out some stuff and talk about equity markets in a broader sense. Smart guy, but the meetings didn't really make the difference between making money and not. I shouldn't say that. They were helpful. They were worth it, but they weren't very structured. The thing that I had I'm going to go over things that I had that you guys don't have, but you could get. That is the ability to talk to different people and have the relationship with accountability to meet. Because after about a year, we met around a table and went over everyone's day. Not specifically, but we went over the runs. I tell people 3 winners in a row, talk about it. 2, 3 losers in a row. If you had a lot of trades, that's a lot. 3 losers in a row, talk about it. Move on. 5 minutes, 5 minutes, 5 minutes. We moved around the room. Unbelievable amount of information you could glean from that. You guys have the opportunity to do it because you're in the Edge group. You have access to guys. So if you don't do it, it's not my fault. It's your fault. If you worked for me, everybody would be doing it. Everybody would have verbal journal. Everybody would document what they do, and they would be able to bring those thoughts fresh because they would have recorded them. But you don't work for me, so I can't make you do anything. The owner of the firm at times could make people do things. For instance, when Brad and Brett started a couple years after me, they were required to go to class, they called it. And it helped them immensely because they were I think Brad didn't know much about trading as far as that goes. Brent, I think, came from the floor. But still, it allowed them to meet each other quicker, join a kind of a bond together, right? Because they're going to class, and it was at noon every day. But they had that, which you guys don't unless you try to create a couple of workout buddies, I call it. The team room gives you a conference room, a break room for privacy. Grab a guy and use it. Some do, some don't. But you have that same virtual opportunity to review or preview or both. Wait a second, Sandy. I just reading your text. Big hair? My hair was too high? Hmm. Yeah, I never thought of it that way. Maybe we should talk more about that. Next week we're going to talk about hairstyles. I just got off a motorcycle. I just remember this picture because she started coming up to me. I didn't know what she was doing, and she dabbing me with. I said, "What are you? I'm putting makeup because of the lights." I said, "No, that's fine. But how many people have you used that little spongy thing on?" Oh, you're the first. You liar. All right, so you got the job. The last question he asked, what makes you think you're going to do this successfully? I didn't know the answer. I just made it up because I'm putting myself, I should have answered it like this because I'm putting myself around guys that are doing it. And, but that was he hired me from the interview. He told the risk manager, you don't have to check his references. He's good to go. You want the job? We could start. And it turned out Monday, April 24th was my first day, maybe a week later. So I go in and put myself around these guys, right? But my first day, guy's name was Ed. He ran the back office. He said, get there about 6 on Monday and, walk you through the platform, which was Yes Trader and TT. I had Yes Trader. Half the office was on Yes, the other half on TT. You guys know it from the video on the Edge site. And if you don't, we're going to go show it to you real quick. If you go to the About page, you have to log out, actually, I think, to get this. But if you go to the About page, the first video is a long one, but move up and it shows you this is what the first dome was, order book, we called it. We never called it a dome either, by the way. Price ladder, but an order book before price ladder. TT looked similar to this before they created the price ladder and actually patented it. But here, FESX is the Euro stocks and the FDAX is the DAX. Tony was the name that they gave. I think this is the ID, and then they just whatever they put in the title bar was the trader's name. So, point is, here's what he tells me. You guys see my mouse that moves around here? Yes or no? You see it? So he would tell me that, and nobody answered. You guys see my mouse or no? Yes. All right. So he would say, he sat me down, Ed, and he says, these are the bids, right? These are resting offers, size of the offer, size of the bid. He goes, last traded quantity, last traded price. Now, remember, he knew that I knew a lot of this stuff coming from the floor. If you want to change your quantity, it's down here, but you're only able to trade one lots because when you start, that's it. When you have a position, it'll go blue in the number you're long or red in the number you're short. If you ever want to check your P&L, you got to click here. Shows you what you're up or down money-wise. Here's the volume of the session. Here's the low of the day. Here's the high of the day. And you cancel all orders here. You could set the price. Whatever you have price and quantity, you hit buy, it'll put the order in. If the price is above the market, it'll buy the order for you. So make sure this price is below before you try to buy it, or above, try to rest in order to sell it. You could also click in here and bid. Click in here. No, I'm sorry. If you clicked in here on the side, that's why I had it blue, you were buying it aggressively. Clicked on this side, you were selling it aggressively. So you might ask, why would you click down here to buy it? Well, let's say the market's like racing. A big, huge move came. You want to guarantee a fill, you'd go down and click here so you get filled no worse than this price. But you click in here, they're market orders. And then the P&L is on purpose blocked out because you don't want your P&L staring at you. But you go down and you click it, make sure it's right. Always make sure you're flat. All the things that should be on a dome today are simple stuff. High, low, volume, right? Quantity, price, position, P&L, but hidden. You don't have to have millions and millions of numbers. And I think like Jigsaw comes to mind. I think Jigsaw is awesome, but you could use it for too many things. You got to strip it back like anything else. It's too many numbers unless you know which ones you're looking at. All right. Big orders would come up here, whether they're bid on the left side, offered on the right side. Eurostox is what I traded more. This was taken from an external camera that I put on a short tripod on my desk. So it was like looking over my shoulder. That's how you reviewed. I saved this tape because the Fed had a surprise rate cut, which is what? Bullish for stock market and for treasury markets too. So it's really bullish because it was a surprise rate cut. It wasn't even the 1 o'clock statement. This was in the middle of the day, out of nowhere in 2001, before 9/11. It was April 2001. In fact, April 18th, 2001, we're right in the middle of the anniversary of this day and my starting this business. If I play this video, which I'm going to do, you guys, you see right here, see it says +8. I'm long 8 contracts, which is a huge position given the liquidity in this market. Not huge, but big. And I got up to +16 because of the Fed cutting rates. In fact, this is where they cut them. They were trading 79, 78, 80. And I seen all this size and they started moving this size. I just started clicking and buying an increment of 4 lots. All right. Now, and I did this on the video when I was replaying it, talking. But I could tell you that, like, when I cover a position, I guarantee I went down and I checked my P&L. All right. So let's see where I covered the position. It was somewhere in here. See the +4 in blue? It was +8. So I must have covered 4. I'm backing it up to seeing where I did that. There, somewhere in there. So let's play it. I'm long 12. I don't want to go too far. Here, I'm long 8. When I cover these, this rallied about 70 or 80 points, and this was the high. I probably cover it. Once I cover it, I can almost bet I check my P&L. So I'm +8. Right now I'm listening. I just seen it go 48, 49. I'm pissed because now it's 39, 40. It just broke 6 ticks. And I click. I don't know where I got out. At least 39, right? And I probably, you see this mouse? That's my mouse now. That's my mouse in 2001. But I'm sure I go and click down. And I don't, because now I'm pissed off I didn't cover all 8. I can guarantee you at 45. Just broke 45 to 25. So I left. $2,000 on the table. Let me fast forward it. This was a good day, but it should have been a lot better, honestly. I'm fast forwarding it. I'm actually narrating this over the what I'm narrating. So it's like 2-time narration here. I don't remember what I made. That's what I'm trying to find. I actually rewound it and then went back over it. It won't let me fast forward it. When you guys get a chance, watch this. And it's 30 minutes. If you haven't watched it, watch it. Watch the whole thing through and through. And I only bought 16. The littlest thing distracts you. The guy says to me, let me pause it. Next to me, and I say this in the video, watch it. First of all, he squawks, our analyst / trader says, Fed cuts 50 basis points. Surprise move. And the guy next to me, our Fed, and it made me think and hesitate, right? But I still knew what it meant, and I still knew it was bullish, and I bought 16 of them at like 79, and it jumps to 45. It's almost a 80 tick rally. But I had trouble covering them because the system locked up. What I want you to watch when you watch this, not now, but later, is the professionalism, a lot of money being made and lost when technology locks up, but the calm of fixing the problem and not letting the you know what hit the fan too much, right? You're still working towards fixing what the issue is. So this was 18 years almost to the day. I started this job 19 years tomorrow. And one of the reasons why I'm bringing it up in this session is to bring guys' attention to this video, to watch it if you haven't, but also to get into some pain points that I could address quicker than you guys can because of the environment I was around. And I could avoid other ones that I might have had in the future because I heard other people have them. So I was asked a question that was great because I brought up, I was going to talk about this yesterday. And when did you start making money? And it was maybe day 2 or 3. And day 30, I knew I was going to do really well because I made 222 ticks, 222 with 1 lots. And I was only, that's the day I knew I was going to make it in the business. But I don't want you guys to take that answer and apply it to you because of all the different advantages I have over those that have started since and without that prop firm structure behind them. I had the floor experience. So it's not like I just started trading on the day that I started trading. Plus, I learned the right way the first way, you know. And a lot of people have to unlearn bad habits to relearn them. But to give you more calm is, I think Brad mentions this, took those guys 6-8 months, solid months of everyday training before they turn the corner. And these guys become 200-300 contract per trade traders. They didn't trade 3-6 lots or 1 lots. They traded 200 or 300. So they turned the corner after 6 months, 8 months. But let's go over these pain points and discuss them. If I don't get to all of them because you guys put in a lot, and that's good. Here's a pain point, losing the first trade of the day. I think that's pretty neat. When I say neat, I think that's a lot of people worry about that and don't think about it. You don't want to lose the first trade of the day. So what does it do? It creates a block and hesitation to take that first trade, right? Another one is missing a move and trying to get it when the action is over. There you go. One of my biggest ones. I don't want to have a loser. I don't want to miss the winner and catch the loser. You got to die. Missed trades are going to be your worst trades, in my opinion. Fighting a bullish move. So this individual likes to sell it, right? I guarantee it. So when it's a strong day like today, if they don't get clobbered, that's good. You can't turn a fading strategy into a fighting strategy. Another pain point, easy to take a 2-3 tick loss when price really flips back on you. Easy to take the 2 or 3 tick loss. But when price really flips back on you, taking an 5 to 8 tick loss. I see what you're saying. So you're taking 2 and 3s, but it's hard to take the 8, hard to take the 5. The reason that is because, and I'm not trying to give you guys automatic solutions. I'm just throwing things out to kind of help clarify it and address it. But the 2 or 3 tick loss might be easy for this individual to take. The reason why the 5 or 8 tick loss is harder to take, because your mind says, when are you going to make that back? You're better off just waiting. Another one, having patience to wait for the setup to complete to pull the trigger. That's knowing you'll be more patient if you know what you're looking for. You'll actually be calm price runs down to support, you're anxious if you don't have a qualifier to buy support. You're just waiting for what you're looking for. You become more calm. Make sure if you're the one with the patience for letting the trigger kind of complete, just know unequivocally what your step 1, 2, and 3 are. Know what you're looking for. Write them down. Another weakness and pain point, seeing but missing entry, then being so frustrated that I miss a second chance to get the same trade. That's when you let the first trade, which was a non-trade, leak into the second decision. I wrote this down talking about this, is you have to find other ways to let the frustration out. Mark, you mentioned this in the room. You have to find other ways to let frustration out and not have the next trade be the first time you acknowledge your pain. Don't let your next trade be the first time you acknowledge the frustration from your last trade or your last missed trade or your last hesitation or emotion. Let it be acknowledged by breaking a mouse is better than by just taking an ill-advised trade. Another weakness, looking for information on how to set up charts with Sierra. If that's a pain point, I haven't had that pain point, but who would have a solution for that? I thought YouTube had some good videos for some of the things I looked for. We actually should have a party, in a sense, to build charts. Another pain point, and if we get answers on information on how to set up charts, I'll give it to you. The baby bird story. Take a trade, it goes against me, starts coming back, so I stick with it, thinking it'll continue to come back, then it turns around and becomes a bigger loser. And this individual told me that, and I said, that's the baby bird, right? That's, you become stuck in the trade, and the reason why your entry is resistance or support. It'll help you fix it if you know why it exists. Another pain point, price approaches a level. You think it's a good trade, seems to get stronger and better, hits it, you put the trade on, and then it does the exact opposite and fast. That happens to you a lot. You are doing something too popular. You're getting short with too many other people or getting long with too many other people at maybe a popular setup for short-term traders. Here's another pain point. I don't know if I should be looking for a long or short entry, and when I hesitate on the entry when I see it, then I hesitate on the entry when I see it. There's nothing wrong with not knowing if you should be long or short, in my opinion, though. On a faster time frame, when I enter, I'll have a change bias from a longer time frame. You're getting too much influence from too many time frames, and you're a short time. It's one thing if you're going to stay in the trade longer, look at multiple time frames. It's one thing to look at multiple time frames to create a bias. It's another thing to look at too much to start changing your mind. It's going to be easy to change your mind once you're in the trade. You got to be careful looking at a 60-minute chart when you're in a trade for 2 or 3 points or 10 ticks if it's oil. If there's a pain point, you got to change it, right? Another pain point, I get really frustrated when I second guess myself on a trade on their trade plan. Example for today, they had a setup 1275, lowered it to 11 because he second guessed himself. If it's a pain point, you got to change it. The reason why you second guess yourself is because it's that little guy talking to you. You sure you want to take it there? Remember one time, 2 times, or last time when you did it? What happened? Buy it at 11. If you miss it, you miss it. Who cares? You got to recognize that little guy inside you talking. Another pain point, routinely abandoning my good process in order to fade the trend in a hope to have a great position in an imagined new potential trend. It's confidence in my ability to read structure and order flow. You have to get confident, because if you don't, fear and confidence are the two things always fighting. When fear is winning, you're not, it's because you're not confident. So you got to find ways to eliminate fear with confidence. You either believe in yourself or you don't, and conversation with other people will get you to that, get you better and better. To lay dormant, not talk to people about this pain or any of the other pain points, then they're not going to self-correct. You're not going to wake up one morning and be 25 pounds lighter. If you do, you probably don't want to be. But you're not going to be muscular and physically fit tomorrow. You're going to do something about it. And you know what? What helps people do things that they otherwise have trouble doing, like exercising, don't think that you have to do it. Think that you get to do it. It makes doing things a lot easier. Like, Christine, I know you work out a lot, right? Think about the things and the habits that you have to make it effortless for you to exercise, and just make sure you write them down to reapply them into trading, because that's the strength you have that most people don't have. Infinity Futures, Roger, if you Google Infinity Futures, they Sierra Charts is their go-to platform. Go to their channel, Infinity Futures, and they have some, and this anybody else watching this meeting in the future, good YouTube videos on how to do some basic things in Sierra. But that should come up with a YouTube search anyways. So those are the pain points that people have. And without writing them all down, because each pain point is unique, it's got to be interesting that other people have either similar pain points or different pain points. Because if you're human, you're going to have them. But if you're human, you have to understand that they're not going to go away on their own. You're not going to be physically fit tomorrow without doing anything. You're going to have to find ways to address them. Is it talking to others about them every single day? Is it overcoming them and enjoying that small victory? Because like one person said, they moved their order from 1275 to 11. How about the next time you start second guessing yourself and you don't, and it worked? Do you recognize that? Because we tend to run to the negative. Just think about Yelp. When you look at a restaurant, you'll get 40 great, things about that restaurant. It was awesome. You have one guy that says, this person was late serving me and this sucked. And everybody thinks there's more weight to the negative than all the positive, right? That's why you got to make sure that you're addressing this pain point every day, or it's going to continue to be a pain point. And that's why when you hear about a book that could address your pain point, or education that could address your pain point, you tend to jump on it. There's nothing wrong with that, but you got to follow through with it. My pain point is by far when I miss trades. I tend to now miss more trades after that because I don't want to miss the winner, catch the loser, because that is my weakness. I get more pissed than anything. of missing the winner and catching the loser. And the loser could have fit within a setup, but then it still aggravates me. So then I'll tend to miss back to back. So you got to try really hard not to miss, but not to also overtrade and see something. But second guessing yourself, welcome to being human. You just got to fight for it or against it, but you got to address it. If you look at today's market, let's move this out of the way. Watch that video on the About page if you haven't already. Real quick, to wind down this session and this meeting, if you had a bearish strategy and you didn't get killed, that means you actually traded well today. If you did nothing but play today from the short side, but you didn't get run over, you actually did well. Yeah, I could fix how to not get in front of this train, but you open short positions, most people who do that have a big hole in their account and will remember this day for a long time. I'm talking about people who sold it near the open and still have it. Sold more, sold more, sold more. They're a one-lot trader. They got 5 shorts on from an average of 24, but it'll come back. Now, there's a one-on-one mentoring that I'm doing I started doing some about a month ago. And the one guy I'm doing it with was fighting it from the long side where we had that big dip on Thursday and didn't lose much money, but he was mad because he had, 4 trades, all losers. But I said, listen, these are good numbers for just the absolute wrong bias. You were dead wrong. Didn't get killed. I said, how about in the past when you did this? You'd be 10 times as much of a loss with more losing trades. That's a big win. To fight, hey, you'll get better at correcting it so you don't fight a move lower or higher. But the first step is when you do it, you don't have to wear it and give back a whole week's worth of profit if you played it from the short side all the way up. And that's what's important. So don't forget your drivers. Don't forget your pain points. And don't forget how you could address them. Because this is a step by writing it down, and we briefly talk about each person that wrote it down. That's a little step. So you signed up for the gym membership. Now you got to pack a bag and go. Find a way that you're going to consistently address your pain point, or it's going to remain a pain point. And there's no special book that you're going to read that's going to fix it. It's going to be at some point, it becomes less of a pain point because you addressed it. And it reminds me of a story that someone who you truly love, you didn't wake up one day and love them. It was the incremental things that they did with you, for you, that just built in to the love you have for that person. And he also used the analogy of working out. You work out every day. On the 3rd day, you don't see any change. On the 5th day, no change. On the 21st day, you see change. Well, it's not what you did on the 21st day. It's incrementally the 20 days you worked out that finally you notice a change. So find your increments and stack them. Find the increments that address your problem and start stacking them up. And they will help. But they got to be the increments that work, right? Or that address your problem directly. They can't be the, I got incremental things I'm doing to get healthy. What is that? I'm eating brownies every morning, incrementally, though. No, they got to be things that are working towards addressing the problem. Then you at least got a chance to solve it. But just like working out, you got to get momentum and then you got to keep it. So people don't just go off a diet. They cheat a little bit and then they cheat a little bit more. And then the cheating isn't cheating. And the next thing you know, in a week, they're not on the diet, but it all starts with that one cheat. So if you miss one day and you've been working out for 6 months, no, that's not going to make you stop. If you miss one day, that turns into missing 3 days. So then the next week, you work out every day, but the following week, it's okay to miss 2 days because you missed 3 days prior to that. Then the fourth week from there, you miss 5 days because that sucked, but that's a little bit. Next thing you know, you're not working out. So you started breaking down momentum and you didn't get it back. So find the little positive incremental things that help address a problem and stack them. We'll see you guys tomorrow or next week.